Welcome to Industry Insights with Route Consultant, your front row seat to the fast-moving world of logistics and beyond. Each week, we bring you game-changing insights, real-world strategies, and fresh perspectives to fuel smarter investments and build stronger businesses. Join us as we sit down with expert guests to explore emerging trends and pressing topics across a wide range of industries. This is Industry Insights. Welcome back to Industry Insights. Today we have something that all business owners think that they understand until they have their first claim. So we're talking insurance today. And in particular, we're really going to dig into the bread and snack distribution space. And so we're going to go over everything, the things that you have to have, the things that you really should have, and a lot of the things that I think people get wrong and misconceptions that they have about this space and the claims that you may have. And so today I am joined by Michael Jones and Jeff Jones here from Routeway 360. So thanks guys for being here.
Thanks, Josh.
And they have tons of experience in all of the fun things that can happen that we're going to go through today. So I think just as a easy way to start, if you guys just want to give a little bit more context on who Routeway 360 is and kind of how you guys got started.
Well, you can start with the older guy first.
Okay, yeah.
First of all, gratitude. Thank you for having us out here and working with your team over the past, since we've been doing this for a while. It's been great. And so thank you. We've been looking for a platform, talked about a platform like this for years, and you guys made it happen because I think there's been a disconnect, right? Of the guys are running solo, and you brought this to make a community. Yep. And so kudos to you.
Thank you. Yeah, that's definitely the idea. I think entrepreneurs in general like to figure out things on their own or try to. Right. And some ways there are a lot faster and easier ways to do it than just doing it on your own. And so community and kind of introducing to people like you where there is a platform, there is a path that they don't have to figure out every single thing on their own. So yeah, thank you guys as well.
You're welcome. So the past, back in 1987, decided to get in the insurance business after graduated from college. Okay. It was in my blood, I guess. My mom was, so we're a generational business. My mom started and she was already in the business for 15 years. Oh. And she said, when I got out of college, she says, well, come in the insurance business. I go, insurance business? Even though, I grew up with it, but I'm like, I went to college. I want to do something big, right? Yeah. But, as I thought about it and I said, this really feels right. And I just didn't know how insurance could really be of value to people at the beginning. I'm like, this is something you got to have and nobody really likes it, like you just mentioned.
Yeah, it's an expense. That's all they think about it.
Exactly. Yeah. And then I realized there's a lot more to it. And through coaching, and I didn't want to just be an insurance salesman. I wanted to be able to be an advocate for them and to really explain and help them along their journey. That's why I went from personal lines working with Allstate, and quickly after the first year, I really want to get into the business owners. And after 36 years, 30 of those years, I was really focused in insurance on the commercial space, specifically the independent distributors. And ironically, my mentor that I got started with was also involved with flowers, and his family was involved with flowers. So he goes, I'll show you the way. Here's what I've done with flowers. And he goes, you can play with all the rest of the brands. Well, he's long since been retired, and now we work with flowers and so many of the other brand companies. But it's been a 36-year journey, and I'm just been excited to know that there's another member of our family team to pass the torch to, and that's Mr. Michael Jones. So.
Yeah, I guess you could say I've been working with, or I've been around the distributor world and insurance world for my whole life. I believe my mother was on the docks of the warehouses when they first got started, passing out flyers, meeting distributors. So while I might not have been born yet, I've been around the culture for a long time. Growing up, filing cabinets were a huge thing, and how the industry's innovated. But been around it for my whole life. For a few years, went and worked in after graduation the world of consulting. Learned a lot about best practices in running a business and organization, and tried to apply a lot of that to what we had started, Routeway 360, which was trying to be sort of a one-stop shop for the distributor market. We noticed that, like you said, entrepreneurs tend to be on an island, and they're going vendor to vendor to try to figure out who they need and what they need. And Routeway 360 solves that issue. The goal was really to say, we want to build a product and a company around a specific industry and be the experts in everything and anything bread and snack distribution when it comes to business services side. And that's sort of been the mandate, if you will, and has grown into one of the largest insurance brokerages focused on bread and snack distributors.
So you guys are talking about insurance, but it sounds like it's also a larger platform. So just, I guess, give people a taste of what are the different things that you guys do here.
So correct. The 360 and the Routeway 360 is sort of the full suite of business services. You start your business and you want to be incorporated. Once you're incorporated, you're going to need a bank account. And so we have a very streamlined way to get a business banking account for distributors. On the top of that, you need the accounting, payroll, and tax services. So we've really looked at what's the business life cycle of a distributor? What do they need? But at our core, we are an insurance brokerage. These are sort of the ancillary services. And, beyond, we can go maybe into it a little later in the podcast, but we're always having an ear to the ground when it comes to the needs of distributors. So actually Friday, we just launched a new business, if you will, called Drive My Route. And it's a online web-based app to find route relievers to cover your route when you're on holiday. And, a big pain point in the industry has been, who's going to cover my route? Who knows how to drive this route? Where do I find them? So we're now kind of recruiting route relievers to jump on, but that's we sort of focus on the whole breadth of it.
That's not trivial. You say a big pain point. Like there are so many people that is often their only pain point of, I have to work this every single day. I don't have any way to have relief. So that's awesome. That alone shows that you're tied in to what's going on in the industry and what people care about. And I'm actually pretty interested to hear more is what I would say.
We can definitely talk about it. Yeah.
Well, what brought up all of our services was because I had started, like Ed mentioned, with Allstate for all those years, and yes, he did grow up from the dock. When I first got started in there, I met a guy in the bread business, and he said, I went to the grocery store, put on my little polo shirt, my little clipboard, and taking notes, and I sold him and another guy, and I said, well, who's your manager? He told me his manager. Manager says, why don't you come visit me? You can see me on this day, and let's meet at 2:00. I said, no problem. I'll be there. And so as I was about to hang up, he goes, you know that I'm meeting 2 a.m. in the morning. I go, oh, yeah, no problem. I said, it's not like any business I've done before, but I'm there. So I looked over, I spoke to my wife. I said, listen, I need some sympathy card here. Can you go with me at 2 a.m. in the morning? I might get some FaceTime with this guy, right? So 2:00 in the morning, I didn't realize also a dock, there's no like stairs to get up, that you go from the truck, the back of the truck, and you jump onto the dock. So here I am with my 7-month-old a pregnant wife, rather, I should say, 7 months pregnant with this guy. And I'm like, well, I get up, and at the time was about 2:00. I got to go. Here, put your foot here. Shove her up, and she like rolls onto the top of his dock.
Oh my gosh.
And starts waddling across the dock, and the whole place stopped. And we walked to the district manager's, the DM, over to his office, and he looks at me, mouth dropped. He's a big old guy too, a lot bigger than me. And he said, what are you doing? I go, I'm here. I wanted to, talk to you. Like, no, but what are you doing with her here? I said, well, she wanted to see what. He said, tell you what, let's make this short. You can take all, because he had heard about me, and we gave our 5-minute elevator pitch. You could take all your little flyers and put them in the cubby holes. That's how it was back then. And it was sample rates for the guys. He says, but don't you ever bring your wife into my place at 2:00 in the morning. So after that, it was just a running joke that I'd do anything to get the business. But along that journey, it was like, how can we help you? How can we serve you? And when we talked to the brand companies, the two key pain points was always, and I'm not sure which order it is, but they're pretty tied: health insurance and route relief. Major problems. So, it didn't take brain surgery. It was like, what are your problems? And after Allstate, and I had that long run. We were the largest commercial writer for Allstate for most of my career, and the majority of our business was independent distributors. So we got to know them very intimately, right? Started, like I said, in the grocery store, then a district manager, and then it went on to the national. So we were the preferred vendor that they go to when somebody's signing up. So it makes it easy. It's turnkey. But when Allstate decided in the last quarter of 2023 to get out of the commercial business, it's like, okay, well, that's a little change for her, since 60% of our business was just in the independent distributor marketplace. So we had to pivot, and the pivot's been great. And as Michael mentioned, it allowed us the opportunity, because we were not under the umbrella of Allstate, one carrier. We had the opportunity now to really do things that can serve the distributors outside of just the insurance business without getting a slap on the hand, like, you're supposed to be selling Allstate insurance.
Yeah. And I really like the idea that you intentionally decided to create a whole platform just focused on an industry. I think that's one of the biggest things when people are trying to figure out the right people to work with. There's lots of people that say they touch, all kinds of industries. And so they say, we have the capability of serving anyone. But I think it's very different to say we have built everything to serve a very particular client set. We therefore know your challenges and have built every product and solution to solve those. And I think that's really important to help people actually be successful and to meet them where they are.
Yeah, as a slight segue, onto the insurance side, is that the only reason we've been able to make such specific insurance programs for distributors is because we know the risk inside and out. And your standard policies and products, you can't really fit a distributor. I mean, you can, but it's not fit for purpose.
Yeah.
And so what we've tried to do is really peel back the layers and say, what do they do? How do they do it? When do they do it? And how do we build an insurance policy around them that excludes things that would be double counting or things they don't even need to pay for, but covers them for things that maybe isn't included or isn't a standard endorsement in your typical policy. So, from the business to the services to the insurance policy themselves, they've really been intentionally designed for distributors.
Okay.
But we followed also just the journey. They have the various brands will have their projects, right? And we'd go from writing up 100 guys at one time because they're just moving them over, changing their contracts, so they had to change their insurance, et cetera. But along that journey, it was like, there was a time for many, many years, they're all sole proprietors.
Yeah.
And it's like, no, we're going to now mandate that you're either LLC or S corporation or C corporation. Just pick one. So, okay, well, I'm a distributor. Well, how do I do that? Right? Well, how does that work? So we said, okay, we'll step up to the plate. Can you guys help? I mean, the brands don't want to get involved in that. They'll say, this is what you need. And so, okay, let's fulfill that need. And we came out with the incorporation service to another part of the spoke. Okay, after you get incorporated, you got to get a truck. So we had an app for that. And then what's another pain point? Well, you know what? We're delaying the closing of a route because these guys are not getting the bank account. They need to get a business checking account. So I went out myself to a local, I won't mention any names, of a major bank, because we had to open up a separate account for something. Yeah. And let me tell you, it took me 2 hours, and then finally they didn't get it done. I had to go back the next day. I said, this is a nightmare. And I'm kind of business savvy. I know how to open up an account and what it needs. What are our guys going through? Especially if you're out in an area where it's not very, a lot of choices, right?
Yep.
So I said to the team at the brands, what would it help you if we could come up with a program where they can get a checking account in an hour or less? And they go, what are you talking about? How about if anywhere in the United States, I'll put it to you, I'm going to, in an hour or less, that we can get one of your guys in anywhere in an hour or less. How would that sound? Man, if you could do that, you're going to make me smile. So less than 6 months later, we came out with a program that's national, and literally they can do it from their phone. They could do it driving. They could do it from their computer. But in an hour or less, we can get them.
Yeah.
And you say, what's that got to do with the insurance? But it's all part of that journey, So after that, you got your truck, you got your incorporation services. Then, of course, you got a truck, you need insurance. So the journey continued.
Yeah. Yeah. And I think that's really important. Just, again, emphasizing that you guys are thinking about where they are. It's like, yes, insurance is part of the problem, and we want to make sure that we're solving for that. But it is, like you said, it's a journey. And And so I think, you talked a little bit about how you got there, but how do you think about bread and snack as a different insurance space than maybe some of the other ones you've served before? What makes it unique?
I could start on it, and then Michael could chime in. First of all, most of these guys are one man in a show, one man in a truck show. And there's not a lot of companies out there that really want to play with. They're too small. The big boys don't want to play with. There's not enough premium in it, right? So I find it's unique because, and you talked about vulnerability also. I think that was one of your words prior to this that you were asking a question on. How are they vulnerable? It's that, they don't know what they don't know. So with us, we decided we're going to hold their hand and build it.
Yeah. But there's nuance to everything. Like, we talked about relief drivers, right? That's not a standard endorsement on some of these policies. And, the whole 1099 world, if I'm going to bring someone on, do I need the work comp? Maybe you could speak a bit to that. I mean, we've seen some pretty, meaningful accident. Claims.
So about that too, and prior to the workman's comp, and I'll come back on that, is it's the guys think that I could just use my pickup truck and I'm just going to keep my personal name. We spoke to a route reliever before we started this program. It came out with the app and did everything just to see what's going on with route relievers. Who are the route relievers out there? How many are there? And there's so few that there's literally some that go throughout the United States of America. They'll fly places.
There's a guy I see on Facebook every week. He's posting. He's like, I've got these dates available. Who wants it? Yeah. So there's those guys.
So as we're interviewing these guys, we're like, so what kind of insurance do you have? And just out of curiosity, what do you mean? Well, we got my personal insurance. I go, you got your personal insurance and you're running this guy's route. And if there's a claim, yeah, but I said, did you have a deep conversation with your insurance agent to make sure that's going to be covered? So what's unique about this business? People think that, a personal policy is going to cover. Now, I can give you the keys to my personal car and you could drive it to the store and come back. And if there's an accident, there's coverage. But with most carriers out there, that's not the way it works. If you don't have a special endorsement on your policy, I won't bore you with the names of all the different coverages for this talk, but you have to have these coverages in place because when that time happens, you're not always thinking about insurance. I need a truck. Okay, so you go get a truck. Let me borrow your truck. You got an extra truck, Joe? Let me put that on the road. Well, am I covered? Is my insurance? They're not thinking to call their insurance agent. So on the front end, we built for purpose, as Michael mentioned, to make sure that these coverages, these guys aren't going to think about it. Let's have the extension of coverage for a rental truck automatically on the policies. What about, and if I drive Joe's truck, will it extend to a non-owned vehicle? So we really talk through that, and with most of our carriers, we have that as an extension for them. So that's unique to it.
Yeah. I think that's really... it's bread, but I see it in a lot of logistics industries where they just don't think about the insurance implications of either using another driver or using another truck they're just borrowing it because all you're trying to figure out is how do I get this delivered?
Exactly.
But there can be huge financial implications if you're not thinking about it, or if your insurance provider didn't proactively think about it for you, I think is because it's very unlikely they're going to be thinking about it until the claim comes.
Exactly. And when you talk about that too, then you get everybody would like to give it to their brother, their cousin, their friend, their golf buddy. Look, he takes care of my homeowner's insurance, takes care of my car insurance. I'll just put it with him. Great, and I appreciate the loyalty, but all I know, man, is if I had something on my body and I wanted to get checked out and I thought it was serious, I'm going to go to a specialist. If I'm going to be serious about my business, I want to deal with a specialist, man. I don't want to sit there and go to my GP for something that's serious. Now, and not to downgrade GPs, because I think it's great. Auto home is pretty vanilla. It's like, okay, auto insurance, home insurance, pretty basic. But when you're trying to run a business, you really need to have an advocate, such as you guys are, on the front end and on the back end and throughout the journey. We too are like that. We know their walk and talk. We deal with their brand companies. So we're an advocate for the brand companies and we're advocates for our clients, and
yeah, we say it all the time. It's, if you are having heart surgery, yes, a brain surgeon knows a lot. They went to medical school, but you don't go to the brain surgeon for heart surgery. Yeah. And so you're not downgrading them. They have capabilities, but obviously if you're having heart surgery, you want a heart surgeon. Yeah,
exactly. And it's that moment of truth, really, right? The claim situation. We spent so much time, and building these programs, and we keep talking about that, but it's important because guys don't understand. I got what the brand company's requiring.
Yeah.
$1 million here. They got to have a handheld computer. They got to have inland marine coverage. Like, what's that? A boat policy?
Well, actually, but like while you're going through that, actually, what for people who haven't heard, what are the standard requirements that you're seeing?
So the bigger boys out there, the brand companies, have a standard contracts that, and most of them go $1 million worth of liability for if they get involved in a truck accident, right? So they want to make sure that there's $1 million of liability. Great, I have $1 million of liability, but that's not all. You got to list the brand company on there because they want to make doggone sure that there's a claim, that they're not going to be brought into a claim situation until that first $1 million goes down. And by being listed on the policy as an additional insured, and it's just not their name. It's got to be very specific, by the way. Because they send those COIs back, certificates of insurance, proof of insurance, if it's not right, because in a claim situation, it's got to be written right. So liability coverage, not only on the truck, but also what happens after you deliver the product. So a truck policy, most all of our policies cover for whenever you are loading and unloading the truck. Believe it or not, even though you're off the truck, but if you're pushing those trays into the store until you're completed that and got back in your truck, that whole process is an extension of the vehicle policy, the commercial vehicle policy, not the personal lines that you got with your buddy, golfing buddy. So a commercial business policy, the extension usually will go from that whole time period. So that $1 million covers for that. But now you put up a nice display and you forgot your tray on the ground. And now, Gertrude comes walking through and all of a sudden she trips on this tray after you've left the store. Who's responsible for that? Walmart? Or the grocery store, they're not going to be responsible because the contract with the store says your boys, whoever is going to be a distributor in this store, is going to have proof of coverage of at least $1 million worth of coverage, and that's on a separate policy, which is called in most cases a business owner's policy that will cover another $1 million separate from your truck. That again kicks in, turns on whenever that you're out of the store. So if somebody you were drinking your water and you spilled some water in front of your display and somebody slips and falls on it, so that liability covers that. The other portion of it is something called inland marine coverage, which is basically short for I got some product in the back of my truck, and that product, in case there's a fire, an accident, hurricane takes my truck and flips it over, it'll cover for the product in the back of the truck. So many of the companies do require that you have coverage for that. $5,000, $10,000 worth of coverage. Not expensive coverage, but it's important to have. And then finally, a coverage called for your handheld computers, the inventory that you take on there. So, at one point when we first got started, it was $5,000 worth of coverage. But like with anything, the cost of technology has gone down. So, it only takes about $2,500. So we've been able to curb some of the costs by lowering that as well.
Okay.
So those are the three.
Yeah, I'm glad you talked about the in-store liability because it was something I was curious about of, what happens after you leave the store? Like how much are you liable for? Well,
and it's important, and especially for the master distributors. So master distributors, for somebody, that's what we call them. If you have multiple routes.
Yes. Multiple
routes out there, so you're going to get somebody else driving. Well, not everybody wants to put them on payroll. And they said, well, but if I do 1099, hey, 1099, I don't got to pay everything, right? And nothing wrong with this, but I just want to bring out, our job is to bring out what can happen. Michael was alluding to a workman's compensation issue that happened not too long ago, and unfortunately we were not the agent on there, the policy, but the brand companies call us because we've consult with them. What do we do? What's happening? And this situation, they had a 1099 employee, and actually it was in one of the big brand stores out there, and the employee or somebody there was water or something, there was liquid on the floor, and it was not from the distributor, but this 1099 guy slipped and fell on it. Well, the 1099 guy decides to sue the grocery store or the big brand company. Brand company says, you ain't suing me. I'm going to go back to the brand company of the distributor. Says, you and your distributor better have insurance on there because we're not paying this bill. We have a contract with you that your guys are going to have coverage. This guy was 1099 and he was hurt. So the guy was suing for his injuries. Long story short, even though he was 1099, the claim started off being, believe it or not, several $1 million loss.
Oh, wow.
Negotiated down. But the distributor himself had to come out with a lot of money out of his personal pocket because there was no workman's compensation in place to cover that guy. So, yeah, you might be saving money by hiring all these 1099s, but think about it, because even though the government might say, well, if you have less than 5 employees, you're not required. But I don't need Big Brother to tell me how to run my business. I mean, if it still makes sense for me, I can be sued. We might not want to talk about insurance. We might not like to pay the premiums for insurance, but he paid several $100,000 worth of insurance for that. And this was a master distributor, big boy. And he almost lost his contract with the brand company that he had a contract with because all this was going on. And they're like, good news is he didn't lose the contract. They still got the account with, the market. But it was a big learning experience. And but I wanted to share it to the world out there, whoever's listening, pay attention. It's not always about the bottom line. How can I cut my expenses? Insurance is about protecting your assets, protecting your business. And by being incorporated, by the way, is one more layer to protect you personally. So even if you're not required by your brand company to get incorporated, it's a good idea to consider it because it's one more layer of protection against your pocketbook.
Yeah, and I think this does all indicate of when you're trying to think about insurance, you need to be speaking with somebody who can explain why it matters, not just what your product options are, because it is ultimately about protecting yourself. And you need to be talking to somebody who actually understands what the risks are. So, one of the things you walked through there, and we hadn't touched on yet. So you talked about the things that are required around the 2 kinds of liability and the product protection, but it sounds like workers' comp isn't required. I would say, just from what you're saying right now, that if there was any kind of recommendation you would make, is that even if you're trying to do something where you're not using workers' comp, that's one of the most important things that you should have as a part of your business. Am I right on that?
Yeah, it's not that expensive of a policy. And what are the chances of a claim? Maybe it's not that great. Maybe over my years, it's not been a big thing. But when it happens, it happens. I don't know when I'm going to go there on the slot machine and pull it, and it's going to be I get to win. So it's all a gamble, right? It's like, what do you want to cover yourself for? So, but workman's compensation is important. Most people, even in today's environment, health insurance is a tough deal. It's expensive.
Yep. A
lot of people run around without health insurance right now. I mean, we're in the key season right now. People are shopping for insurance. It's that enrollment period. And if you don't have personal health insurance, and now, the 1099 guy probably doesn't have enough to maybe even pay for health insurance, right? And now he's going to slip and fall. Well, he's not going to pay for it. He's going to look to who's going to pay this bill for me. And so, you answer your question, I do believe in workman's compensation. I know it's not a lot of these distributors, one man and show, do it, but the exposure is there. It's something to consider. Master distributors, I would say, with multiple routes, consider it, because even these strong contracts you might have, different states play on the side of the 1099 contractor that's hurt more than they play against the big boys that have the money. So just be careful. So master distributors, for something to consider.
Yeah.
The requirements, because we're talking about adding things to the policy. Oftentimes we work to remove things as well. So, we talked about insurance requirements for certain brand companies. Certainly the top 5, 10 largest bakeries have very strict contract requirements. Fortunately, we've built this engine where once we know the brand, it automatically kind of pulls it in, what their requirements are, and then we're connected to all of the brand company COI softwares, so their COIs automatically get uploaded. So compliance is big. I mean, we talk about the requirements, but compliance for your contract and ongoing. And so that's been something we've been, we've prioritized and we underscore because they can't run the route without it. But one thing with the brand companies from a reduction standpoint is sometimes they don't need the coverage they have. And so we'll work with the bakeries and say, we know insurance is a hot topic right now. We were in a harder market. Why don't you look to remove this from your FDD or your franchise docs and see how like it'll reduce costs by 20% for the distributor. So we're active in kind of being an advocate on both sides. But also the benefit too about being specific, just to kind of full circle back to why go deep instead of go wide, is we can underwrite the risk with only that risk. And so in the broader commercial auto market, you get grouped with a lot of different players, but a FedEx route and a bread route and a long haul guy and, a freight is like totally different risk. But if you were to go to General Progressive and say, hey, I need a commercial auto policy, well, you may just fall kind of down the middle and into like what might be the aggregate risk. So what we've done is we've built underwriting programs within each carrier that is dedicated to bread and snack. So when there's a claim, that claim then goes back to our underwriter. We reinforce basically the policy to say, hey, this wasn't accounted for. Let's move these shells around. And so we're innovating the policies, but we're also making sure that if long haul rates start to go up, that it's not impacting. We're kind of shielding the bread and snack space because we know that risk should be underwritten differently. So I think, going deep in one vertical has a lot of benefits, both to the brands, both to the folks that are operating the business, but also to just kind of being part of the evolution of the growth.
Yeah. I mean, ultimately, it gives you the credibility to be able to argue and protect your clients too, with carriers, with brands, to be able to say, we know what we're talking about. And they're like, we've worked with you guys for a while. You actually do know what you're talking about. So we listen. Them listening that's not a trivial thing, either the brands or the carriers, to actually listen to what you're saying. That's not like, I can just call up one of these brands and say, hey, I think your insurance rates are a little too high. You're not taking it into account, right? Like, they're not taking that call. So I think that's a pretty big deal.
The scale, I guess, to also negotiate, right? Like you said, the premiums is, if it's a one-off, what kind of leverage do you have?
Yeah.
But at scale, you start looking at it as a portfolio of risk. And, it's nationwide. So we write across the U.S. and that's important, I think, because you get the national reach with that with those policies and those programs. So maybe you're in Florida and it's more of a high risk state, but when they look at the risk at aggregate across the whole nation, so there's a lot of knobs, I guess, we turn and play with.
Yeah. Hey guys, we just wanted to pause for a moment to invite you to our free events that are happening throughout the year. Whether you're just getting started in the logistics industry or you're looking to optimize your current operation, Route Consultant has events that are designed specifically for you. So head on over to routeconsultant.com/events or check out our show notes to register for free today. Also, while you're here, don't forget to like and subscribe to the Industry Insights with Route Consultant podcast so that you don't miss out on the stories, the advice, and the updates that are happening throughout the industry. We appreciate you being here and hope to meet you in person soon. Now let's get back to the episode.
Yeah, and with the national reach, you're also going to get all walks of life. And with that, meaning we've developed a team, what used to be starting off, we just didn't have anybody speaking anything, just only English only. And now it's like we got a whole Spanish community out there that's wanting
They still need insurance.
They need insurance. So we're like, okay, I wish I spoke Spanish. He can, but I can't. But we have a team that walks the talk in Spanish, and even a lot of our marketing materials in that because, 40. I don't know what the percentage is in the United States of America, but we're fit for it to speak the various languages. And coming back to what Michael said also, and coming back to that specialist versus the GP conversation we had is that a guy that writes maybe one or two independent distributors in a year, it's just because he can write through Progressive or whatever company. Yeah, one, did he put in the right class code? And you said, what makes a difference on the policy? Well, that can make a huge difference. And maybe it's less money, so that's good for the distributor price-wise, but rated wrong could be a problem in a claim situation. Or it's classed wrong on the higher side. So, and then what discounts are really available to them. So I think it's really important that again, to come back to a specialist out there, that's what they do. And even the carriers, Allstate, that was the largest carrier that wrote independent distributors in the United States of America for year after year. We helped to build settlement deduction programs, which means it comes out of their on a checkoff system, out of the money they pay the distributors each week. And then so the brands would just pay us, and we would figure out, this guy's policy. So it was easy for the guys. It came out of like that. So we developed programs like that. We worked with the claims department, built a team of people in the Allstate day just to work with independent distributors. They were not in part of the personal lines department. So you call up and, I got my Tesla and it got a Tesla. Now you got a box truck that's, 16, 18, whatever foot, truck you got. And they don't understand the business. So we've applied that same, or they have, and I've coached them along the way, on how to build these policies. So, when Allstate left the market, it was such a flood into the marketplace. Policies that were once, I don't know, $3,000, $4,000, $5,000, you're talking double the premiums or more, because there was so much. The carriers didn't know how to play the game. So they're like, well, we don't know how to play the game. We're going to charge them this. And we worked with the carriers. Give you an example, one of the major carriers that everybody would know the name started off and said, well, we're going to rate them all at a 200-mile radius. These guys don't do a 200-mile radius. Most of them is less than 50-mile radius. Well, we'll say, that's wrong, but we'll play the game give us 6 months. Well, we put the telematics on there. I know that's a bad word to some people. We can come up with that, but it's really not a bad word because of situations of us being able to track, we were able to lower from 200 miles down to 50 radius to a 50-mile radius, saving hundreds of dollars a year because it was now rated properly. So by working together with the carriers underwriting team, we were able to now build this program and bring down the cost when they understood the risk. And so now that double the premium, we're now seeing it getting back down to closer into the range. Well, maybe it won't be where it was before because cost of trucks and everything else have gone up. But at least we're in a palatable rate, which after Allstate left the market, it was not palatable. It was double. Like, how are we going to even get new guys to sign up for our routes anymore? What are you doing? What can you do? So it's really been a journey. But to tack on to that is, you can work with underwriting, but who also matters? The claims department. So underwriters worked with us, but it was not communicated to the claims department. So now many of these carriers did not let I heard one of your podcasts said, well, the distributors or the FedEx guys, they know what's going on, but the IDPs know, but the district manager doesn't know what's going on because they were closer to the district manager. So the underwriters knew, and we wrote the policy the right way, but the claims department didn't. So we started seeing some denials of claims. Well, that's our moment of truth to say, no. You're not going to not pay this claim. So we would get underwriting on the phone and we would come back and there was clarity. So it was education, not only growing with the carrier companies, but also with their underwriting departments, but also with the claims department, because again, that's what you're paying for. It's not sexy. You got a sheet of paper, but by gosh, that's a valuable sheet of paper when you need it.
Yeah. So talk to me a little bit about, we've talked about premiums. What are the reasons that you see rates go up, and what can you do as an owner to try to keep your rates low? What are the things you can proactively do?
I think, so generally speaking, we are continuously working to keep the market more stable as we add more carriers. So we're always adding more supply, if you will, to which, is good. It makes sure that everybody's in check. So if one writer is getting too big, obviously they have more control. So we make sure there's enough supply. But that's macro and that's market level. At the micro level, individually, there are a number of discounts and things that folks can work with, advisors like us to make sure that are included. So telematics is one of them that Jeff mentioned, and you'd be surprised the kind of discounts available, and that are also kind of unique to their type of route. So, A is just being with the right advisors that have the access, especially because folks talk about renewals being a pain point, and I don't think it should be a pain point, because when people try to do it themselves, A, they may mess up. B, they may spend a laborious amount of time to try to go shop to shop to try to make sure it's correct. But the way that you'll save is saying, hey, can we shop we're going to shop all the programs for you. Every year changes, and we're always going to make sure you're in the right place. But it is important to make sure you're being remarketed every year. So if your brokers, your advisors aren't remarketing, that's a huge savings. We'll see an individual carrier maybe take a rate increase, but then the same program will take a rate decrease in another carrier. So that's a big one for savings. Discounts, I talked about telematics, but being proactive there is important. Yeah.
And there's other simple ones too. But hold the thought on the shopping, because I want to get into that too. But the other discounts would be like, what about your garaging address? So some guys keep it at the depot. Some guys keep it at home. Well, why don't I ask you, first of all, if it's at home right now, and if you could keep it at the depot, and a lot of the brands will allow you to keep it at the depot, and it's going to save you a few $100s. Yeah, you got to drive your car over to the depot and park it there for the day, but it's going to save a few $100s or more. Why don't I change my zip code there? You know, so I think it's things like that, and telematics really shouldn't be a scary word. It's like, well, they're watching me. I mean, I don't know how my phone knows what I'm shopping for right now, but it does. It's like,
we've given up so much privacy.
Yeah, it's like we're giving it up. So it helps. And I'm on the side of we represent the distributors. I'm not on this. Of course, we have partnerships with the brand with the carriers and what have you, and we always want to keep the losses in line and be a profitable and a good partner to everybody involved. Win-win across the board, the distributors and with the carriers, right? But these guys, when it comes to the claims you were seeing about the shopping in the market too, is when they come to shop in the market, a lot of the guys, what they don't understand, again, is what they don't get is they think all the policies are the same. So some of them will be talking in the depot, and they'll be shopping with us midterm, and we're like, why don't you just wait for renewal? I mean, we'd love to take your business, to be your, but you could be surcharged midterm for jumping ship. This is called 10% of the premium. You can be surcharged and lose from some of the financial fees from the premium finance companies out there that you're charged. So it's not just about that. And why do you want to spend your time developing another relationship with another broker, or just yourself shopping with all the 1-800 numbers and explaining your story, the arduous process that Michael spoke about, when we've worked so hard to have such an array or smorgasbord of carriers out there to choose from? If you could find one that we can't write through, then tell us about it, because we'll probably get an appointment with them too. So we'd like to say, if you hear somebody, then talk with us instead of just trying to go somewhere else and not even knowing. Because just because you're with a certain carrier at renewal time, like Michael says, we do shop the market for you through all of our carriers, and then talk about discounts that could be available and options to look at.
And I think that's something that people just in general don't understand about the insurance market, where they don't see that there are agents that can act on their behalf to shop to the carriers. I think that a lot of people are just like, I just have to call the different numbers, and I'll have them fight against each other and get whatever rates. But that's them acting as what you guys are doing. And if they could do a better job than you, then if anybody could just figure out and pit the carriers against each other and get the best rates, then there would be no reason for the insurance market to exist or for agents to exist. But the whole point is, you guys can understand their story and then go to the carriers with the leverage and the knowledge to be able to say, we represent a large suite of clients and brands. We know what's best, but also this is why my client is unique and worth, minimizing the risk. And you can shop among all the carriers in a way that the average person just has no ability to compete. And so they're shooting themselves in the foot when they just try to call and try to get the best rates.
Yeah, totally. I mean, we've actually so much so decoupled the remarketing renewal process from the sales side of the business. So we've actually built an entire team. All they do all day is remarket at renewal. And so I think the average shop combines them together. We'll take care of the renewals, the sales at the same time. because it's such a core tenet to what we offer as a value proposition, we've built an entire team that all day long, 60 and 30 days before renewal, that they're going across every program. And like you said, it's not just calling up the next carrier, it's going to the underwriter at each business, reshopping it. But so it is so much so part of our blood in the advisory services that we've really built around that capability. Yeah. So,
and I would like to say too, please don't look at the bottom line always as a business owner. You buy insurance for a reason, for protection, right? So if you're out there shopping and you say, okay, well, Joe has it, he's paying whatever, $4,000 a year, and you're with another company at $4,500, another broker, I should say, for $4,500, but the same carrier. Well, how's that? The insurance rates are they are regulated. I can't make up the price for insurance. So if broker A is with the same, puts it with this carrier, and broker B puts it with the same carrier, and there's a $500 spread, somebody did something wrong. Somebody rated it wrong. So it's important. It's like, well, this guy's just making more money off of me. This one, that's not the game. It's a regulated system. So it's really important before you make a jump with either to us or wherever, look at what you got on your policy and say, is this the same thing that apples for apples? Do I have all the endorsements we spoke about? If I give the keys to somebody else, will there be coverage? Will there be coverage for a route reliever that drives my truck? So it's super important to stop, look at the coverages. And the thing about the brand companies, it's good sometimes to have a big brother, because we might not want to do what we really should do. Mm-hmm. They're saying take $1 million worth of liability coverage. Why? Because they're protecting their butt. But wouldn't you want to protect your tush too? Mm-hmm. I mean, it's your business. So, well, if I don't have any requirements, believe it or not, there's a lot of manufacturing out there that don't have a contract that has a line item on the contract or agreement that says what the insurance requirements are. Well, just because there's not one, and by the way, we try to have conversations with these manufacturers, say protect yourself and have one. But even if they don't have the right liability limits, I mean, they can. If you're not incorporated, and even if you are, that's just one level of defense. But you're exposed. Just pay. Look at. Do you want to have your monies garnished? Do you want to be the first person to get the money before you could sell your house? You got to pay off a claim that happened. Yeah. You don't want that on your record. So if you're going to be professional and run a business, then get the right coverages. Make sure you have the right liability limits, et cetera, that's going to protect you. And you might have to pay a little bit more, but it's like with anything else. If you pay a little more, you should be getting the coverage you need.
Yeah. And I think it points to a couple of things. One, if you're paying more and you go to your advisor and ask why, they should be able to explain why. Exactly. That's the first thing, is that should be a clear answer of, there is a difference in payment because you are getting X, Y, and Z that you're not at this other policy. And that should be any advisor, anyone like you guys should be happy to give that explanation. And if you're getting, not like half answers, or they're not giving transparency, that's a red flag in and of itself. It's like, okay, well, totally. That's all they do. If that's, if you focus your whole lives on this industry, you should be able to answer that question easily. Right. And then the other part of it is, I think, we only kind of touched on it, but I also think that claims management is such a huge part of the way that your rates can change over time. And so if you don't have somebody who understands how claims management works and is willing to work on your behalf to help manage that, then while it may feel cheaper on the front end, that can have a decade-long implication on your insurance rates over time. So,
and with that, you don't have to be a master distributor to say, I want to have telematics so I could see what all my employees are out there. But even myself, if I could do better, show me how I could do better. And if I shouldn't eat that Twinkie, then I was told that if I eat that, I'm going to get this, right? Mm-hmm. So I can tell you that telematics, like right off the bat with many of our carriers, you'll start off with, let's say, 5% discount. But within less than, many times during the policy term, it'll jump up. It can jump up as high as almost 20% of reduction in your premium for being tracked. Well, if it's my business, I'm not Mario Andretti driving this box truck fast. I'm not braking hard. I'm not going on two wheels around corners and stuff like that. So I care about my business. I'm driving right. Why shouldn't I benefit from the discounts, that I can have? But I don't want somebody to watch me, because if I could do better and it's going to save me on my insurance, and if I'm a true businessman, I want to save on the bottom line, then put a doggone, chip or whatever on my phone that can track me, because I have nothing to hide. And that's so I'm a big advocate, because the more the carriers know about that, they can't surcharge you if you are speeding out. They can take the discount away, but it's like, well, I wouldn't have had it anyway, So take the 5% to 20%, whatever it is that they're going to give you. That's important. So don't run away from that. Telematics.
Yeah. So, a lot of the people that we're talking with, and that I know you guys talk with, are people who are also trying to consider if this is an industry they should step into. So as they're trying to evaluate, as they're kind of leading up to an acquisition, what are the things they should be doing? How early should they call you guys, and what's that conversation look like?
Well, I mean, I would definitely say you can't be too early to get an indication. So if you're modeling out a business that you're purchasing, call us up early, call your partner up early, call your advisor or route consultant folks and say, stress test that line item. Insurance is a decent expense when it comes to running a route. So if you're just plugging in an assumption, or you're waiting until you close to then revisit what the actual costs are, because we write in every state, every county across the US, we can help you or guide you with, you should probably be penciling in X, Y, and Z and with where you are and where you're operating. Because either A, you wait too late and you buy the route and you don't stress test your assumption, or B, you don't really even validate the pro forma that you're buying against, which obviously is, again, going to change the return on your investment. So yeah, I think, it doesn't hurt to be early. And that's part of the reason we started some of these other services, was let's just bring you on the journey before you get too far along. But I don't think there's a wrong time to be early on it. There's a wrong time to be late on it.
Yeah.
And I would say, like the closing table, sometimes we'll have folks who are literally closing on the route, and the brand company will say, where's your insurance? And they don't have it. And they call us from the closing table. Fortunately, we can bind in 10, 15 minutes because of the efficiency we've built into it. Yeah. But
that's very impressive. I don't want to just skirt by that.
Thank you.
Yeah.
We worked hard on that.
Yeah.
It is. And as a specialist, like I said, if it's the brand, it automatically feeds the requirements, which automatically goes into our programs. So when a brand calls up last minute, we can close it. And that, like you said, it is an above average or performance relative to how long it takes to get a quote, and at least one that is right, that's compliant, that's automatically uploaded on your COI. So it's all parts of that. But did you want to say something?
Yeah, and it's also, it helps the managers out there, the DMs. Yeah. It's like they've gone through all this time and effort to vet somebody, and then to finally at the closing table find out he's got a bad driving record. I was going to say different things, but a bad driving record that it's going to make the insurance exorbitant. Well, the guy, I mean, if he does close, he'll close, but then he's going to,
he might not make any money.
Won't make any money, and he's going to lose the route and be out of the game. So, very important for us to, let's run the motor vehicle checks. Let's do all that stuff in the background. And also, give me some sample trucks, do I want a pickup truck and a trailer? Do I want this truck or that truck or what? We'll do the work, man. We'll give you as many quotes as you want. I'd rather you, as Michael said, to be smart and ask questions early on. And it's, and then you got it. So
yeah, I mean, because that's one of those things, we see it all the time, unfortunately, where you wait till the last second. And in just about any business, if you don't have insurance, you're not starting. Yeah. Like that's a no-go. Like, that's the end of the conversation. But I think it's a really good point that you pointed out, that some people might wait till the last second and think it's going to be fine, but if they find out it's overly expensive, it could kill the deal. Yeah. And so there's just no reason to wait till the finish line on something that you can find out at any point in the journey.
And the other part of that deal is, one is they didn't have the right limits. So, I bought it from my local guy or whatever, and they come to the table, but they came to the table with the wrong limits. They didn't have the additional insured, which was the brand company's name on there. So, yeah, they had insurance, but it's the wrong insurance, So now it's a time waster.
Yeah.
Yeah, they got the wrong quote or whatnot. Fortunately, like we were saying, the larger organizations are pretty adamant and stringent on it. It's those regional bakeries we're working with on making sure that we're their risk advisor as well, and this is what other folks are doing, and you should probably have something, because it's really protecting all parties, the distributor primarily.
Yeah,
So,
yeah.
But one of I didn't want to forget this before we had to finish, is that there's a coverage called uninsured motorist coverage. And like, well, isn't everybody supposed to have insurance in America? You know, for car insurance, you got a driver, you got a car, you got to have insurance. Okay, fine. But would you believe that, I know Florida and Georgia, here, Tennessee, you're talking about 25% of the people, 1 in 4 drivers do not have any insurance, and they're driving on the road.
Yeah.
Okay, so when you're talking, again, comparing coverages back and forth, and we've always been a firm believer in uninsured motorist coverage, not to increase the premiums, but because if I know that out of 1 out of 4 chances, if I'm rolling the dice, I'm going to be hit with somebody that has no insurance, and maybe I don't have health insurance. So what is uninsured motorist? Uninsured motorist means if some joker hits me and I'm hurt and I'm in the hospital, well, he's got insurance to pay for me, right? No, he doesn't. Well, if he doesn't, and I don't have any health insurance, what's up? You know, now I'm going to have a bad credit score and everything else because I can't afford the medical bills or get the proper medical care that I need because I can't afford it. So 1 in 4 chances of, and I don't know what it is in LA, but where there's a high chance out there of getting hit. So yeah, it is an extra coverage. So maybe you just got what was required by the brand company just to get your route. Again, you're protecting your business and you're protecting yourself also. So, think about that. Is it worth a few $100s a year to carry uninsured motorist coverage in the event I am hurt? It's not that. It is a few $100s maybe. I don't know. It depends on where you live and all that, but it's vital. Because we see so many times it's not even uninsured, it's also underinsured. You might have the lowest limits by law just to get your tags to drive your vehicle on the road. Well, if I got $10,000 of coverage, I can't spend the night in a hospital for $10,000. So, just because somebody has insurance, do they have enough insurance that if they hit somebody else, that it's not going to leave me stranded? Now, of course, you say, well, just sue the guy. Okay, but now attorney cost and time and frustration and it's a mess. Just get the right coverage from the beginning.
Yeah, and that's what it's about. Ultimately, you're not trying to pay after the fact. The whole reason you get insurance is you're protecting your business. And I think at the end of the day, that's what this is about. And that's what you guys are presenting here is it doesn't matter what space you're in. Yeah. You need to protect yourself and protect your assets, protect your drivers. In some ways too, we've barely touched on it, but like you said, a lot of these guys are not going to have health insurance. And so forget about protecting the brand. That might be one of the only ways that your drivers have any way of, going to the hospital if they get into one of these accidents. So you're protecting the things that are enabling you to be successful. And it's not a huge expense, but it's the thing that ultimately gives you the security and the peace of mind to continue to operate and to continue to grow. As you grow, it's not like the risk gets lower. And so you want to continue to protect yourself, protect what you've built, and work with somebody that understands what the business is so that as you're growing, as you're changing, as you're having new drivers and new trucks, you can ask some questions about what's the best way to be successful, what's the right thing to pay, and trust that they'll have your best interest in mind. And I think that's ultimately what this is all about.
You're spot on, Josh. It's also part of our journey along the way it was sad to see that the DMs and those people at the brand companies, when somebody dies or when somebody gets disabled, the IDP. So, what happens? Well, now the brand company's got to take back the route. They don't want the route back. They want somebody to run the route, right?
They just want the bread delivered.
They want the bread delivered, right? So now what are they going to have their wife drive the car? Take over the route, and that's such a mess. So
you could have your 7-month wife do it, right?
Yeah, exactly.
Yeah, you did it.
Right, there you go.
And it's so funny to me too because my wife is 7 months pregnant right now, so I'm just envisioning trying to lift her up on the dock, and she would I think she would rather take the car and leave me at the dock rather than even pretend that she would climb up.
Walking home.
Yeah, exactly.
Well, it's so important though, these other coverages though, and it gives also the family the peace of mind. Like if something happened to my husband, who is, or the wife that's the owner of the route, that there is coverage in place because there's a debt, right? When you buy a business, you got debt. Okay, so term insurance is not that expensive. Just get a dog on term insurance or whatever kind of life you want, life insurance. We were the ones that in my prior company, Allstate, we had put together a program early in my career that covered it was a disability policy and a life insurance policy. All I'm saying to your audience here is that think about that because especially if you're one man in a show. Maybe you're not Steven that runs multiple routes and he's got a team that's out there. So if he breaks his leg, he's okay. Sorry, Steven, but but he's got a team that can out there and run those routes for him. But if you're one man in a truck, you're running a thing, you break your leg, what's up? What are you going to do? So you're going to have to pay for a route reliever. Hopefully you find a good route reliever. And will that route reliever have the coverage extended over to them, on the policy? But the point is that disability, we had a policy, still do, that we offer, that's $2,500 a month for 6 months. It's a short-term policy for these guys because if in 6 months, I hope they're going to be better. If they're not, then they probably need to sell the route if it's not going to work out. But disability it's nobody wants to talk about disability. Nobody wants to talk about life insurance. But those are two things that happen every single day in this business, in all businesses. So, budget something on the side and say, if this happens, if I'm going to run this as a business, I know that at some point I am going to get injured. I am going to have a health issue. And so get the health insurance, get some disability, get some life insurance, and make sure that way you're really running your route and you're protecting your route and you're protecting your business, your family, and yourself for when that moment happens.
Yeah. So if I'm hearing you right, you don't want to just think about it from one perspective. You want a full 360.
I like that name. Let me write that down.
Oh man. So thanks so much guys for talking through all of this. It's a lot to think through. And I think honestly, a lot of distributors in the bread space don't think about this enough. And so it's why I really wanted to put a spotlight on it. So I appreciate everything you guys have talked through today and walked through and kind of sharing what you all have built for this space.
We appreciate the opportunity to share.
Yeah. And always, as a final question that I require of my guests on every podcast is, you both have to answer. You can each answer one part or two, but favorite movie or favorite book that you have read or watched recently. So you both got to answer.
Well, I'm gonna not be the man that I should be because I gotta say I go to the rom-coms with my wife because I've been married for 34 years. Maybe because I go to rom-coms with her.
So maybe that's the advice to take.
That's the advice to take, right? 34 years, love my wife, and so we sit around and I'm a weeper and she's a weeper, so we sit there and love these romantic love things. So unfortunately, it's not a new one, but holiday season's always great. So the movie The Holiday, is one that we see every single season. And
it's an annual event.
Annual event, man. So we'll put on our pajamas, matching pajamas, and sit there.
So that means you've seen this movie a few times too.
I've seen them seeing this movie. I'm not implicating myself.
All right, so that's the first recommendation. What do you got?
I really like just kind of reading about the way the world moves and the macro elements. So I read a lot of pieces from Ray Dalio and books on economics and where the world's going. And it comes back to this industry, bread and snack. It's completely recession proof when you think about every cycle that we go through. I mean, you may say, are we in a recession? Are we not in a recession? Well, bread's still getting sold. And so
I always tell people, if bread stopped getting purchased, everything else is falling apart. Like we're in Armageddon. It doesn't. Your economic investment decision doesn't matter at that point because nothing else is working. So
exactly.
Yeah.
100%. It's Armageddon.
Yeah.
So.
Exactly. Perfect. Well, any particular one?
I would say his recent series on the evolutions of the economies, and he's got a number of books. They're kind of part of a trilogy, but yeah.
So macroeconomics for breakfast, holiday for dessert. Sounds like a plan. All right. Well, thank you guys so much for being here and talking through that. I really appreciate you guys coming out.
For the opportunity.
Thanks. Appreciate it.